What is going on, traders? So many things to get into for 2022. This is going to be a jam-packed month, as every month is in 2022, because of the macroeconomic cycle that we are in. In this video, I will be telling you the top stocks to buy, or at least the top stocks that I'm looking to buy or monitoring for May 2022. These are very popular videos on the channel for good reason, because people at the end of the day want to know what stocks to buy. However, recently, as of the last year or so, I've been doing these videos with a lot more nuance, telling you what I'm looking at, what levels I'm looking at, whether the stock has earnings upcoming, whether I'm going to be waiting for earnings, what the macroeconomic picture looks like, what is the Fed going to do that might affect some of these stocks. So it's not a just cut and dry, buy this stock and you'll be good forever. So many stocks have seen an ultra bear market in the last year or so, and not isolated to just high growth stocks like Zoom or DraftKings, where these stocks have lost 80%, but even stocks like Netflix and Facebook. These stocks are part of FANG, the coveted FANG category. These stocks are now getting killed as well, because of, again, what is going on with the economy, the fact that the monetary policy is tightening, and the fact that these companies have to really blow earnings out of the park in order to stay afloat, sort of like an Apple. But if you're Amazon, Netflix, Facebook, and you're missing earnings and totally shutting down what your guidance is going to look like, then you will for sure take a hit, regardless of who you are as a company. So the first stock that we are looking at is, no surprise, it is Apple, sitting at $153. This stock was trading at almost $185 back when it hit a $3 trillion market cap. Not a surprise that it completely blew out earnings too, almost pulling in almost $100 billion for the quarter, beating out top line and bottom line numbers all across the board, down 16% from highs. For me, Apple is a no-brainer at 150 or below. It currently is trading at 153. I could easily see it coming down to the 150 level, but in this case, something like Apple, I would much rather dollar cost average. People are way too comfortable buying Apple. Even actually Warren Buffett bought Apple a lot higher than here recently. But people are way too comfortable buying stocks when they are rallying. You have to be comfortable with buying quality stocks as they are declining, right? You want to fade the market. You don't want to try and guess the bottom. If you miss the 10 best days per decade, going all the way back to 1930, your gains would only be 28%. And I know what you're saying. If you miss the 10 worst days, your gains would be 3,793,000%. The point is, a much more realistic metric is if you didn't miss any days, you're still up 17,000% in the S&P 500. So how are you realistically going to miss the 10 best days in 10 years or the 10 worst days in 10 years? That is why I tell you that when I look at quality companies and they are in near bear market status, and I don't mind holding these companies for multiple decades, then I will just buy these stocks as a dollar cost average into these stocks as they are dropping. Now, dollar cost averaging into an Apple is not the same thing as dollar cost averaging into a Zoom or an Etsy. So when I say quality companies, please, I'm not talking about SoFi and DraftKings. I'm talking about actual trillion-dollar market cap companies that routinely beat out top-line, bottom-line numbers, that have been growing at an insane clip for decades, that actually bring in earnings, that actually have cash flow. All right, stock number 2, we are going to be shifting into more defensive categories. This is XLV. I've talked about XLV before. The last time, I think it was when I did the March video, I think, and it was sitting at the 300-day moving average, had a run up to all-time highs. And I was saying that healthcare stocks is one of the sectors, the healthcare sector is one of the sectors that does really well during a recession. It is seen as a defensive sector, obviously, because health needs don't change regardless of what happens in the economy. Actually, you can argue that health actually gets worse when the economy is worse because, people take care of themselves less, etc. Now, where am I buying XLV here? I don't mind dollar cost averaging here, sitting right below the 300-day moving average. It's currently at around 127. And if I didn't say it already, XLV is the healthcare sector of the S&P 500. If you're wondering what's in XLV, let's take a look. United Health, Johnson & Johnson, Pfizer, AbbVie, Eli Lilly, Merck, Thermo Fisher, Abbott, Bristol Myers, and Danaher. Those are the top 10 holdings, not a surprise. XLV also pays an okay dividend yield of 1.55% annually. And if we do fail this 125 level, the next level I'm looking down is around 116. And by the way, if you want access to all of our trades, long-term, short-term, etc., my analysis, the options day trade watch list, which we put out every single day, because we wake up neutral and play these levels, we have options bots, trades bots, upgrades, downgrades, market news bots, etc. We have a beginner section where a coach answers your question. Any question you can ask the coach. No question is stupid. We also have a beginner's education section of the Discord. This is actually a free section of the Discord. So hit that link in the description and check me out on Twitter and Instagram, where I go over trade recaps almost every single day, recapping exactly what happened with the options day trades that I've taken, the wins. And today I'm even going to be recapping a loss, because I think that there is much more value in learning, or just as much value in learning from what you did wrong as there is in what you did right. All right, back to this stock. So stock number 3 that I'm looking at right now is Google, ticker symbol GOOGL, or actually Alphabet. The difference between Goog and Google is just one has voting rights and the other one doesn't. I prefer to trade Google, the one with the L, because the options liquidity is a bit more. So if I need to sell calls or whatever, I could do that. Plus, that's the one with the voting rights. Not that I own enough shares to vote on anything significant. Anyway, but the company's down 25% officially in bear market territory. Now, I think you could actually afford to wait here to see, depending on when you're watching this, to see if Google can actually hold up at around the $2,300 level. It did slightly miss on earnings per share. However, we're talking about a company that brought in $68 billion, $24.62 earnings per share, trading at historically low valuations for Google itself. We're talking about 20 times earnings and only 5 times its sales. We've seen Google actually trade as high as 35 times earnings. So this is relatively low for Google historically. And you can see that it continues to grow revenues from 2018 to 2021, going from $136 billion to now $257 billion. So it still has a growth trajectory. And I don't know that Google actually is subject to a valuation reset the way that a lot of companies, including Netflix and Facebook, are. Plus, it recently just announced a 20-for-1 split as well, which is going to happen sometime in the summer, I think July. That will undoubtedly raise its stock price, as we normally see splits do. So there you have it. Those are the 3 stocks that I'm currently looking at for May 2022. Obviously, I'm also looking at the indices, the SPY and the triple Qs. For me, you know, anytime you see those down 20%, historically, those are buy points. There has never been a time when an index fell by 20% that you didn't end up making money in the long run. Every single time, going back to the formation of the US stock market. So again, I'm not looking to miss the 10 best days in the market. I don't think that we are at a major buy point here. I think there's still quite a few headwinds. However, I do think that most of the bubble has burst, and we are actually closer to a bottom than we are to a top. So even if we do fall from here, how many more percentage points do you think we're going to get a drop on the indices? I mean, you might have a completely different outlook on it than I do, but still, I'm not deploying cash at a rapid pace, just slowly dollar cost averaging in quality names that I like to own for the long term. Anyway, traders, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up. Leave it in the comment section below. Let me know what stocks you are buying. What are you looking at? If you have any questions, leave it down below as well. I like to answer each and every single one of them. I will likely be doing a 100K portfolio challenge soon. I don't like to call it a challenge, but really just showing how I would invest in this type of market. I will be doing that since I got overwhelming support for that on Twitter and on YouTube. Again, follow me on the social media you see in the link below, the link tree below. Follow me on Instagram, Twitter if you want to see my trade recaps. Come join the trading community. Would love to have you. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.